Hello, my name is Marshall Stock, and along with Andrew Calvert, Ross Mintz, Andrew Wynn, and Samuel Sullivan, we covered PetroQuest Energy, Inc. Today, we will talk to you about PetroQuest's background, their current strategy, our investment thesis and what we think are the key drivers of the stock currently, our valuation of the stock, and our recommendation to investors. PetroQuest is an independent upstream operator and is headquartered in Lafayette, Louisiana. The company explores, develops, acquires, and operates onshore and offshore properties in the following regions: Oklahoma, Texas, Arkansas, Wyoming, and the Gulf Coast region. PetroQuest has a market cap of $308.11 million, making it a small cap company. PetroQuest produces both oil and natural gas products at its 5 main properties to protect against volatile commodity prices. The company implemented its current corporate strategy in 2003 after it shifted from selectively operating in the Gulf Coast basin to longer-lived onshore properties. Their 5 main areas of focus are the Mississippi Lime, Gulf Coast, Woodford Shale Reserve, East Texas, and Fayetteville Shale. The Mississippi Lime and the Gulf Coast regions are PetroQuest's current oil-rich assets, while the remaining 3 assets are natural gas-focused. As a result of current low natural gas prices, PetroQuest has reduced its focus on dry natural gas production and focused more on its oil and natural gas liquids-rich properties. With this strategy in mind, PetroQuest plans to drill 60 to 70 new wells throughout 2012 in the Mississippi Lime and Woodford Reserve. Also, PetroQuest plans to drill 2 new wells in the La Cantera Basin by mid-2013. A unique aspect to PetroQuest's diversification strategy is that they are able to fund this diversification using its free cash flow from its oil-rich Gulf Coast assets.
Now we will discuss the key factors that influenced our investment thesis. First, we will explain the joint venture with NextEra and how it mitigates risk for PetroQuest. Then we will discuss the La Cantera discovery and the potential for strong production in years to come. Next, we will talk about the newly acquired land in the Mississippi Lime region, and finally touch on the stock price volatility and the risk it creates for the company. In May of 2010, PetroQuest entered into a joint venture agreement with NextEra. This agreement guaranteed PetroQuest a total of $128 million to invest in the Mississippi Lime and Woodford Shale projects. This money received from NextEra funded 80% of the cost of the new wells drilled in these regions. In return, NextEra received a 50% share of all assets in these regions. As part of the agreement, NextEra received 29 BCFE of proved undeveloped reserves in the Woodford Shale, and the right to earn 50% of PetroQuest's undeveloped Woodford acreage. The Mississippi Lime is PetroQuest's main focus for future growth in oil production. 2 currently operating wells have yielded 75% oil at an average initial daily production rate of 491 barrels of oil a day. PetroQuest plans to complete 15 to 20 new wells by the end of 2012. Out of the 7 wells online, 2 are producing water after being online for about 100 days. The fact that 2 of the first 7 are still producing water should be a concern for investors. The success and magnitude of the La Cantera discovery will provide an added 100 BCFE gross proved reserves that will stabilize cash flows over the next 5 years. The La Cantera Basin is the largest discovery in company history. A discovery of this magnitude along the Gulf Coast has become a rare occurrence in the E&P industry. PetroQuest plans to drill a 3rd well called Thunder Bayou, 2 miles north of La Cantera, which is expected to spud in the 2nd quarter of 2013. PetroQuest is a catalyst stock. Production results from each well yields price movements in the short term because of the small size of the company. Investors who are looking for stable growth over an extended period of time should avoid investing in PetroQuest. The commodity prices of oil and natural gas are extremely volatile, which can lead to uncertainty surrounding PetroQuest's stock price. PetroQuest is exposed to various risk factors that can affect the company in the short and the long term. These risk factors fall into 3 main categories: operational, regulatory, and financial. Operational risks include reserve depletion risk, severe weather risk, and commodity pricing. Hurricane Isaac exemplifies severe weather risk, as PetroQuest had to shut down its Gulf Coast operations for a week during the storm. Environmental regulations, such as increased fracking policy, compromise PetroQuest's potential expansion into other areas of operation. The greatest risk associated with PetroQuest is the ability to meet both long and short-term debt obligations. Currently, PetroQuest falls in line with the industry average for their debt-to-equity ratio. After using the PV10, 3, and 5-year methods, the EV to BOE method, and the EV to production method, we give PetroQuest the rating of market outperform with a 12-month target stock price of $7. For long-term risk-tolerant investors, we recommend investing in PetroQuest. Those who are short-term risk-averse should avoid investing in PetroQuest.
On behalf of our team, the A.B. Freeman School of Business, and Tulane University, I hope you have enjoyed our presentation, and thank you for watching.